Hey traders. Okay, so the analysis videos are going to continue happening, and I thought now that you're becoming so much more familiar with what's going on with the markets, that we start to break the different segments down and go more in depth into them, so you start to have a better understanding of what's going on. And so, whilst I'm actually nursing a binary options trade that's going to expire in 6 minutes, so which is on this candle here, whilst we do that, I'll run you through some analysis of consolidation patterns and what to expect from that. Now, this is a live trade on a live binary account. So basically, the reason why I took that, we've got a nice evening star pattern. I took my entry, waited for, let me blow that up. I waited for this candle to open, come back up. It was above both my Babylon slope line and my EMA 6 line, and I took my entry right above there. I could have actually waited for more of a confirmation above the 38.2 line, but my entry was at 686. So right now with high-low, they're showing at 643. So I'm very comfortably in the money at this stage with 5 minutes, 5.5 minutes roughly still to go. Um, the basic premise behind all of this, one, evening star setup. The other thing is to take note of what's happened yesterday. Remember where I've said take into account the whole movement that happens in the market throughout the week? Well, in this case, what we've seen is where slight consolidation spikes to the high on the EMA 50, market comes down. We've got a nice long drop, Euro JPY pair, by the way, on a 15-minute chart. Then we enter consolidation again. The other thing to note is that the EMA 50 and the 200 did cross. Okay, 50 is coming below the 200. And now, remember we were saying that market comes down and then it will come back down at some stage to commune with the EMA 50 line. Well, if we're not seeing it in the London or the New York session, there's every chance that you will actually experience that in the Asian session. So in this case, it came back, hit our EMA 50. For those of you that trade early Asian session, you could have looked for retracements or like a pullback trade off the 50 above it at some point. Again, keep in mind, place your buffer zones in. So look for points of confluence where you would have applied your buffer zone. And then when market push back up again, we apply our fibs. Okay, hold on a sec. Let me draw this down so you can have a better look. Right to the base of this. And we zoom in. Okay, so what's actually happened here, this little doji here went up, hit our 61.8 line. So those of you that are trading the 61.8 strategy, this is possibly the best time for you to be trading it, especially when the market's already going down. We see consolidation, market comes back up, hits the 50. That's where you're expecting, because what we're looking at here is there's going to be some degree of continuation. From this point on, however the market behaves, and then going into London session, we're expecting Euro JPY currency pair to head down, unless it actually offers us a false move to the low and starts establishing some form of structure, and then starts correcting itself back, coming back into the middle zone somewhere here. But for all intents and purposes, for the time being, we're expecting that the market will do something and then start heading down, right? So when you know there's a gravitational pull down, what we're looking for is all trades that we will be able to apply puts. And this would be this particular strategy that I'm applying to here, which is the evening star pattern strategy, off the next candle. And in my case, my criteria is where I'd like a bit of a buffer in there. So I apply and make sure that price comes above my EMA 6 and Babylon slope line. When it does, I take a put for the remaining duration of that candle, right? Now, the reason why I do that, there are going to be instances where, if, say, for instance, the market is going to head straight down, but it's not going to happen anytime soon. It's going to go into, say, the London session to do so, right? What can happen is where the market is just going to stall. You might even end up with a green doji here, okay? If you've applied a bit of a buffer, that lessens or minimizes your chance of a possible loss. This is how you go from hitting 85, 90% to closer to hitting 100% wins, okay? And in that case, you might actually miss some good trades, but you also minimize your losses. And that's extremely important, especially when you're working your way up to putting more and more money on each trade. Okay, so I've got a minute 40 left on that trade, and this looks like a very comfortable win. Okay, right, so let's go on to consolidation patterns. Now, basically what a consolidation pattern is when you see the market just going sideways, right? For a Forex trader, this is by far the most beautiful thing that we're waiting for. Just 1 second, let me connect power. I got 10% left on the battery of this laptop. Okay, so it's possibly one of the most beautiful things that a Forex trader will look for. And why? It's because when you see a consolidation pattern, like is the case here, where from the initial high of the Asian session to the initial low of the Asian session, there's only about 28 pips. Okay, so when you look at your pairs and you say, a particular session for a particular currency pair hasn't moved more than about 30, 40 pips or so, then you're expecting that there is going to be somewhat of a breakout and a directional move that's to follow. And usually, after a consolidation pattern, that move is going to be significant, right? So we now know, say for instance with a pound pair, market is going to move and we've got a minimum movement of 150, 200 pips. With the euro pair, we also know anywhere from 70 to maybe 120, possibly even more pips. So if you're in the business of collecting, say, 30 pips or so, or 50 pips, you know that you can wait out a little bit for the market to move and then look for your entry, jump in, and win that trade. When it comes to binary, same rules apply. What that also says to me, thank you, Mr. High and Low. That's a nice win. What that also says to me, as is the case in what happened with Euro JPY yesterday, is where you get multiple opportunities for you to enter into a trade, right? So, and basically just means that, you know, when a trend starts, you might have a few big candles that might make up 50, 60, 70 pips, but then you'll also have a whole heap of smaller ones with wicks to them that will give you a lot of opportunities to apply various strategies to that. So, for example, in this case here, where we've got a bit of a continuation pattern happening, but see this candle here, which opens up and then pushes up. At some point, you will, in real time, make a judgment as to where you would apply your entry or your trigger zone. So you could even grab your fib around that point in time and say, we're going to draw a line from this high to this low. You could also look to see if there's patterns forming or support and resistance towards the left of the screen. So do a bit of search to see if there is actual points, confluence points. Now, if I want to take this and say this is off, okay, that line there is off the low of the New York session sometime last week. We can apply that and start looking for points to see, is there a possible entry? Now, at this point, because the 23.6 line is so far away from where would like our possible entry to be, you would have to make a judgment call on whether or not you would think the MA6 line will come and commune with it at some point, and that's where you will look to take an entry, right? So you could do that. You could do this pattern here, which is a continuation pattern. It's where the market has fallen, pushed up, and pulled back down again. You could look for an entry right off either the start of this candle or jump into at the top of that candle. Again, all of that you can pre-plan based on what the accumulation phase is doing or the consolidation pattern is showing you, right? So for those of you that aren't aware, we literally just call consolidation phases or patterns the accumulation phase. And what it basically means is that most of the bigger dealers, the market makers, massive institutions are accumulating orders at this stage. Okay, And once they're doing that, we know again there is a directional move coming. What we're looking for now is a move in one direction, a confirmation. So what we start doing, we start paying attention to which direction the wicks are at. We start paying attention to where the EMA 50 is, or where the EMA 200 is, the types of candlesticks that are forming. Like just off yesterday's video where I was saying where I think it was pound pair. Pound pair, what I actually took my entry here, we rode this up and made 30 pips. But when I started seeing this sort of behavior in the middle is when I exited my trade and didn't expect for this to go higher. Reason for that is that this in itself lets you know this is consolidating, and there's a possibility of the market either coming down or some sort of correction happening or something happening which you might not be in control of. So what we do is we exit that trade, bank our profits, and then we wait for a sign from the market to say, okay, we've done our thing, we're going to jump in, we're going to do something with this, okay? Yesterday, after seeing all of this, I did come back and I did two trades. One was a binary trade, which was on Euro JPY, and it was this one here. Okay, so why did I do this one? Well, when, again, taking into consideration that there was no news release happening, into early London session that will affect the euro in any way. So we've got no other reason for the market to spike back up and create somewhat of a triple swap or any sort of head and shoulders pattern, whatever. So market comes down. I see this push up and then this push down. So what I did do, I waited at the open of this candle, let the market push up slightly, hit my EMA 6 line, and that's when I took my entry for the market for 15 minutes on a binary trade, and that won comfortably. The other trade that I took at the same spot was a Forex trade. Okay, remember I said to you that in most instances when we try and jump in earlier, what you're going to find is that you're going to have to sit through the market making its decisions. So if the market, in this case, like I did with pound JPY and pound AUD and CHF JPY yesterday, where I went in early to capture some trades, in this case, what you would have found is that you're sitting within that market for an extended period of time waiting for the market to move. So although you can bank your 15, 20, 30 pips, I banked 70 pips off that yesterday, just off those moves here for pound JPY, AUD, and CHF JPY. Although you can get your pips, you're wasting a lot of time doing so, right? So what you do want to do is, especially after a consolidation period, when you know the market's going to move significantly, is wait for it to give you some sort of an indication that it's done its thing, right? So it did its thing, came down, started to slow down, and it was straight after this move here that gave me an indication that this market was ready to go down. So I entered a Forex trade here, and I was out in 45 pips. Okay, so it was in this candle here somewhere. Okay, so this all the way down to the bottom of this would have been about 56 pips. I jumped out at about 45. Okay, somewhere in there. Actually would have been here somewhere given spreads. So again, why did I not ride it all the way down? Again, it's 70 pips earlier in the day, another 45 doing this. I was happy with that, in and out. For all intents and purposes, the trades that you absolutely want to take is these sorts of trades where the market just moves. Because as soon as I jumped into this trade, the market literally just moved in a manner in which I was instantly in the money. That was 13 pips already. I was easily about 10 pips in the money just in the first 15 minutes. With two candles, 30 pips in the money. The chances of this bouncing back and doing another hit to the high, yeah, it exists. There's every chance that the market is just going to stall and then come back up and do another hit to the high during the New York session. But especially after this behavior without seeing any specific reversal patterns forming, for me this was good enough that this market was going to continue going south. Bank my profits, get the hell out of there. 15 minutes, okay? And this is also an example of where I say to you, you can actually combine, just from your analysis alone, you can combine both a binary trade, You can combine a Forex trade. And for those of you that are trading Nadex as well, you can even combine Nadex. And all you do is you go in, you calculate whatever the present price point is. You jump into Nadex, and you need to be able to calculate spreads and to know what price they're offering you. And then you say, okay, in 2 hours, I believe the market's going to be well and truly below this. So you could possibly do an at-the-money contract if you wanted to, or add 5 pips to this, okay? Because you're expecting this market to move down significantly, remember? Add about 5 pips to whatever your present price is on there, give it plus your spreads, and you'll say, okay, I'm going to take an out-of-the-money contract. And when you do, you're probably paying less for that contract, but when you do and your expiry is in 2 hours, by the time the market has moved down here, remember this is already 10 pips in the money. So you will already be in the money. Now, for those that are trading Nadex, you can choose to, if there is a significant difference in price. Now, if you're in the money, you can choose to sell that contract, get the hell out of there, or write it, wait for the next few candles to form. Now, this one, again, like I said, from this point to this point, you're already about 50 pips in the money. So if you really wanted to, wait out your 2-hour period and make the full amount on your contracts. So trade it like that. These are the absolute ideal trades to take, right? One setup aligns you with binary, same setup aligns you with Nadex, same setup gets you 30 to 50 pips with Forex. You can bypass all this nonsense, right? That's what we're looking for. These sorts of trades like this one here for binary, that's what we're looking for. You do a handful of those. I did 3 binary trades yesterday. No, actually 4 binary trades yesterday and 1 today. That's 5 for the week. Now, if you then have grown to a point where you do 3 or 4 just for the week and you're applying maybe 500 to 1,000 pounds on them, that's still very, very good money. Okay, so do it that way. Now, let's go back and assess a few more of consolidation patterns. That's going to give you some idea. Okay, what we're looking for basically when you're looking at the range down below, we're looking for something that is, say, 30 pips or so in the money. Look at this one. This is a consolidation zone which just kind of continues into the London session as well. Now, 2 things. Remember I said 2 things that you're looking for. One is as soon as the consolidation pattern is recognized and the movement again is only about 30 to 40 pips max, the lesser the better. There are going to be times where you see less than 20 pip range from initial high to initial low. When you see that, those are my favorites. Why? Because again, the market's going to move significantly and we're looking for entries. 2 things are going to happen. One, just like yesterday, so if we go back here, just like yesterday, there is no specific news that the market would have had to come in and create a false move for us and then head south. So it just kept going down. You did see specific moves that will give you somewhat of an indication, like these constant pullbacks here. This evening star pattern, this constant wicks to the high, this sort of move down south, that would have given you an indication. This possibly would have been a continuation. For me, it was absolutely sealed with this candlestick behavior here. That's why I took my entry on the next one, because I knew this isn't going to go back up again. This is going to head south. So you take your entry there, right? The other option is where when the market does consolidate, you will see a false move in the direction that it's not going to go. And the reason for that is, and maybe I suppose because significant markets were closed yesterday, where they weren't expecting too many stop hunts to happen. And so in this case, what would have happened was they would have probably spiked the market up in a couple of aggressive moves. And that's what we're looking for. When the market goes up and then it aggressively moves back down again, this sort of a behavior, but just longer candles and longer wicks, we will take our entries at the next point. So let's jump onto another currency pair and see if we can find something that makes a lot of sense. Okay, This is not a consolidation pattern. Good 43 pips for, and just be mindful also with the sort of currency pair you're dealing with. Okay, this can be consolidation from here, from this point to this point. This is Euro USD on a 15-minute chart. So from the initial low to the initial high of the Asian session, we're talking about 16 pips. These are beautiful, right? What we're expecting now is, remember I said at some point the market's going to go break something and then go in a different direction. The easiest way that I apply this sort of awareness to my trades, or this how I approach this sort of a structure, is I will grab my horizontal lines and I'll just draw them in on where the initial high and the initial low are of that consolidation pattern. Some people use Bollinger Bands. You can do that as well. But I tend to use just my horizontal lines. They're much easier. And what I basically do is I'll wait for the market to break one of these lines. And I won't care about what the market is doing up until that point, unless, of course, I look at news and then it's going to give me some sort of indication later on. But until it breaks, I'll be doing something else. When the market does break one of my lines, I will then analyze the behavior. So if you look closely, remember where I said to you, you're looking for patterns, you're looking for structures. The patterns that we're looking for after these close is, one, there's an aggressive move, big, strong red candle from the low of the Asian session comes down, and then we've got another one that moves aggressively up again, right? We're still somewhat confused at this stage as to what's going on. So we're not sure if the market's going to continue heading down, and that would have been an indication if this green candle here would have been a red one, and we would have thought, okay, this is continuation pattern, market's heading south, right? We see a bit of a wick to the low on this candle here. So here's what we're seeing. We're seeing first wave down, second wave up, third wave down, fourth wave up, right? What does that remind you of? That's a double bottom setup for us. That's a nice W pattern that happened in 5 candles, right? So, and keep in mind, it's never just going to be a really beautiful up, down sort of setup, or down, up sort of setup. So these things, you're going to have to familiarize yourself. So jump onto Google Images or just go scan through your charts. Remember I said look for right before where the move happens. So as soon as you see this, the reason why we love this, one, it's just giving us an indication the market's ready to head up in this direction. At this stage, we probably wouldn't bother about taking a trade. If you really wanted to, you'd jump in and you do a Forex trade straight off the bat of this candle. What I'm expecting after this aggressive move, especially that fourth wave, is some degree of consolidation. It's always there. And for me personally, I wait for the consolidation to happen, which is my personal confirmation this market's going to continue heading up in that direction. That's where I will look for my entries. Binary traders, here's what you're doing. So you could take your entry here for Forex, go up. You might even look at taking a binary entry on the pullback here. There is no pullback here. What does happen is market enters consolidation phase, and that's what we're expecting, whether it's any pattern, right? It doesn't matter what pattern it is. It will establish a pattern, and that fourth wave or sixth wave where the market then begins heading up or begins heading down, there will always be a slight consolidation. If it doesn't happen, you've missed it, forget it. If it does happen, this is your confirmation. This is the area, that's your sandpit in which you're going to start to play, right? That's all we're looking for, our little play area. The market's done its thing. Forget trying to trade this. Forget trying to trade this. Let it do its thing, and then let it create our little play area, our sandpit for us, and that's when you start to look for entries. Now, here's what we do. This candle opens up here. That's off the EMA 200 as well, comes down. What we're waiting for is that safe area for us to trade. So remember confluence points. So what you could do is you could use this as your open, so initial low and your 100% ratio down here. So you start utilizing those lines and you say, okay, if price comes down here, that's our 50 line. And look at this. We've got the 50 line. We've also got this point here where the EMA 6 and the Babon slope commune. So you can look at taking your entry here and do a call for the remaining duration of these 15 minutes, right? Also, a confluence point is that it is above, or sorry, this is below the actual bottom of this candle here. Mentally speaking, what I always do is, say for instance, we were to consider taking a trade here. Say for instance, this EMA 6 line was up here somewhere and we were considering a trade off this 38.2 line. In my mind, I'd still be thinking that my buffer area still is past the bottom of this candle here. Okay, it's just, again, remember your buffers in your strategy is extremely important. So I would have said my absolute cutoff line is here somewhere, and then below that is where the MA6 comes and hits. So I would have thought, okay, if there's 3 points of confluence here for me, I'll take my trade here, or at any point past that. Right? So if you were at the 50 line and below that, you take your trade and you've won that trade. If the market's coming back down again to do the same thing, again, you could probably, in this case, I wouldn't take it straight off that, but I'd probably wait till it comes lower, right? Take a trade, win it. If this candle here ends up being green, if this was a red candle and it was down here somewhere with a bit of a body, I would not trade this candle. But because this candle is a green one, what I would do is wait for this to open, come back down, and I would even consider any point past the bottom of this candle here to be my entry point. So you'd automatically expect that price would hit EMA 6 at the 38.2 line. But remember, buffer. I would expect it to come down and hit it below these two bodies, and that's where I would consider taking my trade on that. So having investigated your consolidation zone, you've got analysis of your pattern, and straight off that, 3 possible binary trades. Forex-wise, guys, if this is coming down, I've missed my entry, I would take my entry straight off the bat of as soon as this hits here, or if you want it to be safer, let's do this. And usually I like doing these if they're crossing a EMA 200 or 50 line, is where I would like for the next candle to open, come back down, and hit my EMA 50 or 200. This doesn't quite hit it, but comes very close. So you can take your Forex entry anywhere from below this, right? My confirmations, okay, so let's just measure this. I think it goes all the way up here. 17 pips in the first candle, 18. By the third candle, you are 20-something pips. It takes you a while to actually get to, oh crap, it takes you a while to get anywhere near 50 pips. Again, another reason why I don't really like trading Euro USD or Euro pair so much. Euro USD pairs, if you're in the game for maybe 20-30 pips, you can do that comfortably. I wouldn't chase 50 unless you've got a bit of time and you're wanting to sit there and trade for a while, or if the market is really moving. If the market is really moving and you've got a solid confirmation, you can go plan for your 50, but jump in and out 20-30 pips or so. With my Euro JPY pair, I was very lucky with that yesterday, where I did aim for 50 or 45. It's just simply because of just the way in the manner in which the market was moving. If you see some giant leaps like these happening, possibly consider exiting a trade not too long after, because there are various reasons why these giant leaps tend to happen. Okay, but then again, going back into points of confluence here for consolidation patterns, what they can do is give you an indication of a significant market move that's going to happen. Always draw your lines in, so your support and resistance areas from the initial high, initial low of that consolidation zone. Wait for a breakout, look for patterns. If there is no significant breakouts happening, like here, for example, and what I mean by significant is where if we draw these lines in here, what I mean by significant is if the market's going to head down, but it's not giving us any specific hits to the high, no stop hunts to the high, and it just continues on, wait for another sign from the market. In this case, this was a continuation pattern for me. That was the other sign from the market to say we're going to continue heading in that direction. So those are one of two things that could possibly happen. If you do end up with your your break, your false move, spike hunts, and then a pattern, that's even better. Okay, let's see if we can pick up another one. Where are we? We're going into Jan. Okay, that's 41. It's only about 25 here. This is only about 25 pip range, but it's kind of moving in a direction. You kind of just want it to consolidate. Look at this one. This is absolutely beautiful. You know, sometimes it's going to happen multi-session. That's even better. So in this case, where you've got 68 pips, Asian session, and then you got pretty much from the middle of the London session all the way going into your New York session, which is constantly just consolidating. Look at that. That's, I'll figure this one out in a sec. Euro USD pair from here to here is about 19 pips. Okay, this 49 pip range that they're talking about is, I think it's from this point here as well. So this is only 19 pips. What are we expecting? We're expecting some sort of a break and then a move. Now, in this case, this market does go early Asian session where it does break. It does break this resistance line that we've got up here, and then the market's heading down again. Now, what we could have thought was, okay, at some point this is going to continue and do another. Remember, patterns are everything for us. We're not just going to jump in here. We're expecting it to come back down and then go back up and establish some form of a pattern for us, because that's what we want to trade. In this case, we would have thought, okay, this is going up. It broke past the high of this, and then this candle came down. What are we expecting? We're thinking, okay, this is going to continue going this way, right? But there's no significant move. And for most people, this is where you will get caught. You jump in too early. We want another confirmation. We want the market to come back down at least to this point here with its candles, and then give us some sort of an entry for us to say, okay, this market is now ready to head south. In this case, came nowhere near this middle area, right? So don't jump in too early, all right? Only do stuff like that if you kind of are an experienced trader, like what I did yesterday. I was still able to bank 70 pips off of those 3 trades. But if I wasn't an experienced trader, I'd be looking at that, I'd be stuck, and the next thing you know, I would have been losing money on those trades. So don't jump in too early. And then see how after this candle moves up and finishes off here. This to me now says that the move has already happened. This market is going to move upwards. Right? This is a continuation pattern. So what I would be looking at doing is taking an entry off the next candle. Right? Now in this next candle, I jump in, say it's a Forex trade, I jump in, I'm 7 pips in the money, and then the market pulls back down and possibly out of the money given spreads. But because this candle here is tiny and has not gone all the way down this way, then what I'm being shown is that this is going to be, this red candle in particular is a confirmation for me that I've chosen my trend accurately, and this market's going to continue moving up. So in 45 minutes, I'm still about 30 pips in the money, and then you kind of just ride the wave briefly. At some point, if you've missed this, right, going in towards the end of the Asian session, we've got 42 pips in the money. Say, for instance, you've missed this completely and you say, okay, I've miscalculated, I don't know what the hell's going on. Remember, there's always going to be a retracement. There's always going to be somewhat of a pullback before the market moves back up again. So what you can do is start applying your Fibonacci tools, right? So what we're doing again from the low to the high here, and you're always going to do this based on where the pullback is going to be. I always want my 100% line to be at the point where the pullback is coming towards, right? So, and that's what's exactly going to give me accurately an idea of which line it's hitting. These three for me, 38.2, 50, and 61.8, are my reversal points. Those are my trigger lines. 38.2 is weaker, but I absolutely love my 50 or my 61.8. And that's why I say if the 61.8 lines up with 50 or 200 at that point in time, and you've got a spike happening at that point in time, take a binary trade off there and look for a possible entry on Forex as well. Right? So again, your triggers on. So wait for the market to come back down, hit this, and then go back up again. So you will then take your entry off here for Forex. Remember, after every significant move, there is going to be some degree of consolidation, so don't freak out when the market's doing this. You will possibly have to wait for a while before you are back in the money again. But look at this. You are in a couple of hours, about 25, 26 pips in the money. You'll go through that agony again before the market really rises up. And in a few hours' time, maybe slightly more, you get your 50 pips or so. Again, aim for about 30 or so when you're doing Euro pairs initially, because you'll be more comfortably in and out quicker. When you are in the middle of one of these candles, unless it's bouncing significantly, you could probably even consider just riding it to a point where you're kind of just happy with it. What I teach, guys, is slightly different to what other people teach, and the reason for it is where I'm not here to transform you into millionaires overnight. My goal here is to ensure that you guys become consistent traders, right? So if you stick to an actual goal of maybe 30 to 40 or 50 pips, but given currency pair, 20 to 30 pips at a time, and you can do that consistently 2 or 3 times a week, that's enough money to that's enough pips to make you really good money week in, week out. And you'll always be a consistent trader, and when it comes to Forex, you will always be a 100% trader because you'll be trading safe. Okay, that's the benefit to consolidation zones. Look for an area which is literally 20 or 30 pips and under. Okay, again, given currency pair, you're looking for those moves. Draw your lines in, highs and lows. You're looking for significant moves. Remember, your entry criteria needs to be strict, right? And then you start applying whatever familiarity you've got in terms of what you're looking for on the charts. If you start doing that, you're going to be a consistent trader. Now, with binary, remember we discussed our entry at any point in time here. What you would look to do is Euro USD don't really give out that many nice wicks. So say, for instance, this was a different currency pair. What you're looking for is the market to open, come back down below your EMA 6 and your balance slope line, and that's when you're looking at taking an entry. Put in your fibs as well. See if there's additional confluence points for you. Add your buffer, and then take your trade for the remaining duration of that 15-minute candle. Rightio? Okay, I think we're done here. I'm going to do an analysis video sometime today as well. That's going to run through these crosses that have actually happened. Okay, all right.